So what makes a perfect property deal? That's the subject of today's episode of Property Answers, where we seek to answer your most burning property-related questions. Now, I'm joined by someone who's done more perfect deals than most of us have had hot dinners. John Howard.
I wish that was true, Ranjan. I wish that was true. We've done a few.
What, hot dinners or perfect deals?
Both.
It's a very individual thing. I mean, it's a very vague term, perfect
It is
deals,
a vague term, and everyone.
I'm sure we'll both answer what a perfect deal is in different ways.
Yeah, absolutely. And I think.
What would you describe as a perfect deal?
Well, for me, I don't manage to do it very often, but I now and again manage to what we call back-to-back a deal. This is when you never pay for it. So you find a property, you then find a buyer before you have to pay for it, and they purchase it off you the same day that you purchase it off the original vendor. Now, I had one lady on one of my seminars saying, my solicitor says that's illegal. I hope not, because I've done it a few times and I've not been arrested yet. It's not illegal at all. It needs as I say, the stars to align, and it's not always easy to do. And in my experience, the only time it's ever worked for me is when I wanted to buy that property anyway, whatever. If I've just tried to find a property to back, as it were, it never works. So you need to show that the purchaser, that you've got a big discount, so you can pass some of that discount on to them. It's not easy to do. I manage it maybe once or twice a year at the most. But it isn't easy to do, but that for me is a perfect deal. Interesting.
Now, because I know, and viewers may know, John does a lot of trading and developing. So you have answered that question perfectly for that sort of scenario. I, as many of you know, do a lot of long-term hold, keep, rental. So my definition of a perfect deal is no money left in. So a property that when I go to exit finance on long term, then I don't have any of my cash left in a deal.
No,
it's making positive cash flow after servicing the debt, and whatever monthly return you're making is an infinite return.
Yeah, and you've leveraged it.
And you've leveraged it. So again, the stars have to align. You've got to buy a property at a little bit of a discount to market value. You've got to be able to add some value to it. And that gives you the combination of being able to exit finance when you've added the value to a level where the debt that you're going to get on the property replaces everything that you've put into it, and the equity that the bank requires you to keep in the property represents the uplift that you've generated. And if you can do that, that's a perfect deal. Infinite return.
Well, it's very interesting you should say that, because I had a deal recently where I was renting the whole building from day one to Serco. And I valued it at 10% yield. And on that basis, from day one, I shouldn't have needed to put any money in at all. And I spoke to my bridger, one of them, who said to me, no, that doesn't work. I said, well, why doesn't that work then? Why have I got to put money in if at the end of the day it's valued at 10%? And they went, well, because you're not putting any money in. I said, yes, I know, but if I came with that deal to you 6 months later, you would do it. You would finance the whole thing. Yes. So why can't I do it from day one? Because I'm paying 500,000 for it. It's worth 700. Yeah. So why can't I buy it? Why can't you finance the whole thing for me instead of making me put £200,000 in? So in other words, they'll lend 300, I put 200 in or whatever, when it's worth 700. And they went, oh, well, you just can't. Well, it's no answer, is it, that? In the old days, they'd let you do that deal. Now they're saying, oh, no, you own it 6 months before we'll do it. Why? Why? Doesn't make any sense, does it? But that's banks for you.
So we've talked about a perfect trading deal.
Yeah.
Talked about a perfect long-term buy-to-let deal. What about a perfect development deal? What makes a perfect development deal?
That's an interesting one. For me, I like buying developments that are half finished off banks.
Half-baked.
Half-baked, half finished, because some poor person has actually done all the hard work, got it out the ground, run into financial difficulties. So what they've built, I'm buying at a big discount. So if it costs them £150 to build what's there per square foot, I'm probably paying £80 a foot for it. Then I'm finishing it and then I'm selling it. So I've got one in Scotland where we've done exactly that. But before I bought it, I'd already sold it on when it's finished, not straight away, to Fife Council. So they'd already signed up for me to sell it to them. So that was a pretty good. That's not a perfect deal in my view.
Guaranteed exit.
But I'm guaranteed I'm guaranteed a buyer at the end.
Yes.
So that I like that.
Yes.
That's a super safe deal. So that's the next step. From back to backing completely, my next step probably would be that, a guaranteed sale at the end.
Well, if you look at the common thread beyond those three scenarios, development, trading, long-term buy-to-let, it's all surety of exit.
Yes.
Surety of exit from exit
Absolutely.
financing on the buy-to-let.
Fantastic,
It's all surety of exit.
You're absolutely right. You're absolutely right.
Otherwise, it's speculative. It's gambling.
Exactly. And the other thing that is obvious when you think about it is that you've got multiple ways of getting out that deal. You've got multiple ways. You can sell it immediately, you can refurbish it and sell it, you can refurbish it and keep it. In all three scenarios we've just said, we could do those. And the reason we can do those is one reason only. That reason is we paid the right money for it in the first place. We bought it cheap in the first place. If you buy it for the right money, you've got options. If you pay too much for it, or what is considered market price, you can only got one option normally. That is the difference. We're looking for discount. We're looking at trade prices. We're not looking at retail. We're at the cash and carry, not at the retail shop.
So the old saying, you make your money when you buy. Is that an essential ingredient of a perfect deal?
Absolutely. The selling is in the buying.
Absolutely.
If you buy it right, you've got options. If you pay too much for it, make a mistake, you've got to try and get out of it and get your shirt on your back still, not lose your shirt. That is the difference. And what I do find, Ranjan, is when I talk to lots of people at these events and so on that you do and I do, what I do find is they're not looking for a big enough margin. They're happy to buy off Rightmove at a 10% discount or something, what they consider. It's just not enough. You know, you've got so much that can go wrong with every deal. And we talked about de-risking in a different episode, but there's so much you can go wrong. You really need to be much more aggressive on the price you're paying. You know, people almost seem embarrassed to make an offer at what they should make an offer at. Oh, well, the agent says it's worth this much. I couldn't care less what the agent thinks it's worth. The agent hasn't got a clue. How does the agent know what it'll cost to put right? They haven't got a clue, and they don't care. The client wants that, so that's what they put it on at.
What I find with commercial property is that invariably most sane buyers are operating on a similar spreadsheet. You know, a lot of costs are very, very similar for a lot of people. And you tend to find that sometimes people overpay.
Yes.
And because they've underestimated the costs,
Totally. We've all done it. You've done it. I've done it. We've all done it.
But they do it to an extent which is just out of proportion on that deal. So what I always advise people to do is, if you think someone has paid something crazy for a property, there's one of two things. Either they've got an outcome which is far better than you ever thought of.
Exactly.
And you need to learn from that. Or they're a complete nutter. So, and I think it's important to find out which. So when you lose out on a deal, go and find out what they're doing. And sometimes, I find that A, they've got a better plan than me, or B, 1 year later. I mean, I just went to a site earlier this week. We've bought this site, and there was a site a few doors down, which I think went for silly money, and it's 1 year down the road, and nothing has happened to it.
Surprise, surprise.
Because it's uneconomic.
The next thing will be back in an auction.
Exactly.
Exactly.
And how many times has that happened? So they're the nutter.
Yeah. Yeah, absolutely. And don't, I get people say, oh, I've missed out on that deal, missed out on that deal. And I always say to people, you've missed out on that, but that person now it's not going to be your competition going forward because they've already bought that and they're stuck with it.
Yes.
They're stuck with it. A great friend of mine is a top commercial developer. So he will develop Marks and Spencer's. He will develop, Costas and all these out of town. And do you know what? They take a risk on nothing. Nothing, Ranjan. So one of these commercial developers, they take an option on the land, subject to planning, in other words. They then get all these tenants lined up. They sign them up, subject to planning. So they then sign up a pension fund to buy it off them at the end when it's all built as a long-term investment. And they take a margin. Nothing is to risk. Nothing is to risk. It's like people building office blocks. No one builds anything commercial on spec, it's called. It's all built with a buyer already lined up and signed up. And that is how they do it.
And that is that's what we're saying, the perfect property deal is, where you have surety of exit. How much is the time taken to execute or complete a deal important? Should it be in the fastest time possible? Because if you do something in the fastest time possible, there's less that can go wrong.
Do you know what I've done sometimes? I've back-to-back deals and made a reasonable amount of money. And then I've not found another deal as good for another year or two. And I'm thinking, you know what, perhaps I should have kept it and done that deal. And the rule of thumb is, we always use this rule of thumb. If we could get 50% of the profit up front without doing anything, we'd sell it. If we couldn't get 50% up front, we'd keep it and do the development. But I think now, because it's got much harder and everything, I'll take a third up front rather than do the development. So if I make a third of what I'm going to make in 2 years' time, I'll take it. Whereas in the old days, I wouldn't take less than 50%. But then it used to be, you could do deals quicker, develop things quicker than you can now because of all the planning, and everything else takes so much longer. So that's my rule of thumb. So if I can make a third straight away, I take it.
Okay, it's interesting. You just take me back a few years now. A few years ago, I bought a property at auction. A derelict property, paid $880,000 for it. Now, 4 days later, the auctioneer got in touch with me and said, look, there's this guy who really wants to buy this property.
Happens a lot.
He got his diary wrong and he got the day of the auction wrong.
Yep.
And he's prepared to offer you 1.2 for it.
Yes.
Would you have taken that?
Yeah, all day long.
Really?
Yeah. In the old days...
I kept it. I said no.
Well, of course you would.
Still got it today.
Yeah, of course you would. And now it's worth many, many millions more.
I've just had a valuation of close to 5 on it.
So there you go. But I'm a dealer. I've always got the ability, I've always got the confidence that I can find another deal. And that's what you find with a lot of people. They feel that they hang on to a deal because they don't think they can find another one. But I would have done that deal because I'd have think, well, I can make, 400,000 quid.
People don't think. I think you're right. I think this was a. There were some other factors here. I mean, with property, particularly commercial property, there's some benefits from the monopoly approach.
Yeah.
If you've got Regent's Park and Oxford Street, you might as well have Bond Street. You get some economy. You do get some economies and strategic advantage from having certain properties next door to each other, opposite each
Sure.
other, and all of that. So this is one of those type of
Yeah.
propositions. And I had a long-term plan for it, exit for it, and blah blah blah. But I think it all boils down to fundamentally what I'm looking to do in property, probably as opposed to you're looking to do in property. And I'm looking for those long-term let and forget type of opportunities, as opposed to the constant deal.
I love trading, I love dealing. The fact I'm a property developer is really because if I could trade everything, I would trade everything.
Mm-hmm.
But many years ago, I decided that what's important is to do both. So to mix and match. So to have a residential portfolio that hopefully covers some of your lifestyle and everything else, and I've got a substantial portfolio across the UK, and also I've got commercial portfolio, but also I love my trading. And it's the only fun part of what I do, to be honest. The rest of it is, let's be honest, it's a bit of a grind at times. But I do enjoy the thrust of it all, the buying and the selling. In fact, I've got one on the go now, which if it happens, I'll tell you about in another episode. I've got 2 weeks to go. I'm hoping I can back it okay. Be the first of the year. So
I'm sure you will. I'm hoping
we can do that.
Okay, I get the trading, the quickness, the back-to-back, and how that's perfection. I get the long-term buy-to-let and exit financing and all of that. Now, when we do the developing, PD, permitted development, all of that, but the exit is very sure, because as soon as it's complete, you pretty much got the exit finance valuation done.
Absolutely.
And you're done.
Yeah.
But with the development where you're looking to sell, you can be in a situation where a perfect deal gets imperfect by the day because it's taking longer to sell, or you don't know what the market conditions are like at the time the first unit's ready to sell.
2 years later, and of course that's where...
How do you deal with that?
Well, interestingly, that's where this buying off plan came from, didn't it?
Yes.
And the buying off plan allegedly gives you that stability. And some banks would say, John, we want 30% of these sold off plan before you start the development. I go, well, that's crazy, because I'm giving away 15% of the profit, maybe more. Or am I? Because there's no guarantee that in 2 years' time they're worth any more than these people have paid, and they're meant to get a so-called discount of 15%. So it's a tricky one. I suppose you're hedging. It's hedging, isn't it, really?
Yes.
So if you can sell a third of the development before you start, that gives everyone some confidence. The only question I would say is how many of those people are going to complete if the market drops 15% in the meantime? Probably not many. And a lot of developers have got into trouble like that. Not so much this time round, but in the 90s, where they sold and the market dropped 30%, they're never going to complete. So it swings and roundabouts. But you're absolutely right. You need to make sure there's big margins in these developments because of that fact that you're uncertain. You think you know what you are. And of course, if the market is on the way up, you hope it continues and you'll make a lot more. But that doesn't always happen. And I would say, the big capital gains I've made in my career, if I'm being honest, haven't been from the bigger developments pro rata. They've been from the where I've added value and retained them and moved on quite often, as much as they are the trading, I would say. And the bigger developments come with a lot of stress and a lot of risk, in my view.
I mean, there are lots of ways of achieving the perfect deal, and it's going to be different for different investors and depending on what outcomes they seek. But there are some commonalities, and we've talked about some of those: surety of exit, minimizing of risk, coming out with a decent margin, and knowing that you can achieve all of that pretty much before you get into the thing in the first place.
Absolutely.
And that gives you the essence of a perfect deal. And then you can cut and slice that in multiple different scenarios in the world of property, and we've shared you with some of the ways that we have done it. And I think the other important thing we need to leave you with is not every deal we do is perfect.
No.
You know, John used a phrase which I use quite a lot. You know, sometimes the stars have really got to align
Yes.
to get that. But then, you know, if you don't get the stars aligned but you aim for that all the time, and you only off course a little bit, it's still pretty good.
Exactly.
You know?
Absolutely. You're not going to hit every time. It's not possible.
Yes, yeah. I mean, in my scenario, when I talk about no money left in, sometimes, you know, you're left with 3% of your money left in. But when you work out the return on that money, that 3%, it's still fantastic.
Yeah.
But if you aim for that stars aligning, then, and you're only a little bit off, then those aren't too bad either.
I think have high standards.
Yes.
That's the key.
That's it. That's it. And that's what we have on this YouTube channel, High Standards. And if you want to make sure you get more of these high standard videos, make sure you smash that like button, comment, and also subscribe for more. See you guys next time. The Baker Street Property Meet is the UK's largest and #1 property investors networking event. The property market is going through monumental change right now, and at Baker Street Property Meet we aim to keep you up to date with the latest tips and tricks and insider tactics to help you keep on top of your property investing game and succeed in these troubled economic times. The Baker Street Property Meet is fundamentally about networking, because it's not what you know, it's who you know. And at Baker Street we aim to connect you with the people to make your property journey a monumental success. There's no better place to be to further your property investment journey than the Baker Street Property Meet. So make sure you're here, you're connecting with myself and Andrew Roberts, our expert guest speakers, and 300 passionate property people each and every month. See you at the next meet. Get your spot at bakerstreetpropertymeet.com.